Question: in an item rate contract commonly used in Pakistan, payment to the contractor is primarily based on Option 1, a fixed lump sum amount for the entire project. Option 2, actual costs incurred plus a percentage fee. Option 3, measured quantities of work executed multiplied by agreed rates. Option 4, milestones achieved as defined in the contract schedule. Question: the primary document used for recording detailed measurements of executed work on site, signed by both engineers and contractors' representatives, is the Option 1, Bill of Quantities, BOQ. Option 2, Interim Payment Certificate, IPC. Option 3, Measurement Book, MB. Option 4, Variation Order, VO. Question: according to the typical priority of contract documents hierarchy, often based on PEC/FIDIC, which document generally holds the highest authority in case of a discrepancy? Option 1, Bill of Quantities, BOQ. Option 2, Drawings. Option 3, General Conditions of Contract. Option 4, Contract Agreement. Question: mobilization advance is typically granted to a contractor to cover Option 1, costs of materials permanently incorporated into the works. Option 2, initial setup costs like plant mobilization and site facilities. Option 3, compensation for delays caused by the employer. Option 4, the cost of fixing defects during the defects liability period. Question: what is the primary security requirement an auditor must verify before the release of mobilization advance? Option 1, an insurance policy covering the works. Option 2, a hypothecation deed for site materials. Option 3, a valid bank guarantee for the equivalent advance amount. Option 4, the contractor's latest audited financial statements. Question: a secured advance is typically paid against Option 1, work certified in an IPC but pending payment. Option 2, non-perishable materials brought to site but not yet incorporated into the works. Option 3, approved variation orders pending formal agreement. Option 4, performance security submitted by the contractor. Question: liquidated damages, LDS, are intended to Option 1, penalize the contractor heavily for any minor errors. Option 2, act as a genuine pre-estimate of the employer's losses due to contractor-caused delays. Option 3, cover the cost of unforeseen site conditions encountered during execution. Option 4, fund the employer's supervision costs. Question: an extension of time, EOT, granted validly under the contract terms primarily relieves the contractor from Option 1, responsibility for correcting defects. Option 2, the obligation to provide performance security. Option 3, liability for liquidated damages for the specified period of extension. Option 4, the requirement to follow the engineer's instructions. Question: which of the following is generally not considered a valid ground for granting an EOT under standard PEC/FIDIC-based contracts? Option 1, delays caused by the employer, example late site handover. Option 2, contractor's own financial difficulties or inefficient planning. Option 3, exceptionally adverse climatic conditions. Option 4, force majeure events, example floods, epidemics. Question: performance security is primarily held by the employer to safeguard against Option 1, inflation in material costs during the project. Option 2, contractor's failure to fulfill contractual obligations, example default, defects. Option 3, delays caused by statutory undertakers, utility companies. Option 4, disagreements over the interpretation of specifications. Question: the validity period of a performance security bank guarantee should ideally cover. Option 1, only the construction period until the issuance of the taking over certificate. Option 2, the construction period plus the defects liability period, DLP. Option 3, only the defects liability period, DLP. Option 4, the period until the mobilization advance is fully recovered. Question: escalation or price adjustment in a works contract is applicable only if. Option 1, the project gets delayed beyond the original completion date. Option 2, the contractor requests it due to increased profit margins. Option 3, there is an explicit clause allowing it in the contract, often with a specified formula. Option 4, the engineer unilaterally decides prices have increased significantly. Question: when auditing an escalation claim based on a formula using indices, example from PBS, a key check is to verify. Option 1, the contractor's cash flow status. Option 2, the physical quality of work executed during the period. Option 3, the correctness of base indices, current indices, coefficients, and calculations. Option 4, whether there is abnormal inflation in the world. Question: according to PPRA Rules 2004, Rule 36, a public works contract in Pakistan should typically be awarded to the bidder who submitted the Option 1, lowest priced bid, regardless of other factors. Option 2, bid with the shortest proposed completion time. Option 3, lowest evaluated responsive bid. Option 4, bid from the contractor with the most experience. Question: executing agencies in Pakistan, when making payments to works contractors, are generally required by law, Income Tax Ordinance, 2001, to Option 1, pay an additional bonus if the work is completed early. Option 2, provide exemption certificates for all taxes. Option 3, act as withholding agents and deduct applicable income tax at source. Option 4, forward all invoices directly to FBR for tax assessment. Question: if a variation order introduces a new item of work not covered by existing BOQ rates, how should the rate for this new item typically be determined according to contract provisions, PEC/FIDIC based? Option 1, based solely on the contractor's submitted quotation. Option 2, by taking the average rate of all items in the original BOQ. Option 3, by the engineer through rate analysis based on market rates, CSR, or similar principles defined in the contract. Option 4, by deferring the pricing until the final bill negotiation. Question: the role of the engineer/consultant appointed by the employer in a works contract typically includes. Option 1, solely representing the contractor's interests. Option 2, financing the project execution. Option 3, supervising the works, administering the contract, and certifying payments. Option 4, directly hiring and managing the contractor's labor force. Question: physical verification through site visits is considered crucial in works audit primarily because it allows the auditor to Option 1, check the contractor's head office accounting records. Option 2, assess actual progress, verify quantities claimed, spot checks, and potentially observe quality aspects. Option 3, review the original tender documents stored at the site office. Option 4, interview the workers regarding their wage payments. Question: before tendering and awarding a public works contract in Pakistan, the executing agency typically requires which essential prerequisites related to project approval? Option 1, final payment certificate, FPC, and as-built drawings. Option 2, performance security and mobilization advance guarantee. Option 3, PCI approval, or equivalent, administrative approval, AA, and technical sanction, TS. Option 4 extension of time, EOT, approval and liquidated damages calculation. Question: a common audit finding related to liquidated damages, LDS, in Pakistani public works contracts is Option 1 excessive LDS being charged even when delays are not the contractor's fault. Option 2 LDS being calculated based on project cost instead of contract price. Option 3 non-imposition or unjustified waiver of LDS even when contractor attributable delays occur. Option 4 contractors willingly paying LDS in advance at the start of the project.